Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to Zacks' top stock picks. My pick this week is CBOE Global Markets. So here's an article I wrote last week. I chose CBOE as the bull of the day, and that is the way they spell the company name: big C, little b, little o, little e, and CBOE. Used to stand for the Chicago Board Options Exchange, quite an institution in Chicago, as the birthplace of listed options trading. It's quite a story. So in this article, I actually tell a little bit of that story, but it's just fascinating because the Black-Scholes model was created in the late 60s, and by 1973, traders were being taught how to use it, how to apply it, how to create markets based on the inputs of timed expiration, the strike price, the volatility, all that stuff that goes into the Black-Scholes model. And then CBOE is also famous for the VIX, right? Which is if the VIX is, we call it the fear index. It's measuring the volatility on the S&P 500, and where the VIX comes from, you reverse engineer the Black-Scholes model. Instead of putting in a historical volatility to give you what an options price should be, what the fair value for an options price is, based on the other inputs of time and strike price and interest rates. Instead, you put in the prices of puts and calls that are being traded in the big SPX pit there, the institutional hedging, options hedging arena for the S&P 500. You put a basket of those prices into the Black-Scholes model, and it spits out an implied volatility. And that's where the VIX comes from, to tell you, because basically it tells you when institutions are paying up for puts, the price of risk, the price of insurance is going up on the market, and an indicator of fear. So I talk a little bit about that. Where does the VIX come from? Why is CBOE a Zacks #1 rank? Well, they delivered another beat and raise quarter, and it's all about volumes are going up for them as we've been in this bear market. Volatility on the rise. It's good business for CBOE. So in this article, I go over some of the quarter details. Let's take a look at the estimates real quick. I'll tell you that analysts raise estimates. They also raise price targets. I believe Credit Suisse raised their price target to 159, and Deutsche raised their price target to 148. And I'll show you another call right after we look at the detail. So here's the detailed estimates page. You can see CBOE is a Zacks #1 rank, about a 13 billion market cap, 13 and a half, I think. So here we have this year's top line growing at over 17%. And next year, has got some projected growth. I expect next year's estimates to go up. This year, profits grew at 12%. So let's see what happened to estimates here. So in the past 90 days, this year went from $6.45 to $6.78, and so here's the jump. After the beat and raise, they obviously had to raise 22. Q4 guidance was stronger, and also encouraging, next year's guidance was stronger. So you see moving up here from 90 days ago, 660 up to 699 for next year. All right, I told you I'd give you another call here. So I just posted this on Twitter. If you follow me on Twitter, you can also find the link for the Bull of the Day article I just showed you on Zacks.com, where you can get more background on CBOE. But so at Kevin B. Cook on Twitter. Let's see. I'll highlight this tweet that I posted. I just wanted to give you a frame of reference. So Morgan Stanley, a financial analyst there, made CBOE his top pick. He had Schwab as his top pick. Obviously, this guy is focused on brokers and exchanges, and he made CBOE his top pick, basically for the same reasons that I just talked about, why they're delivering beat and raise quarters and estimates are going up. It's this options exchange is benefiting from macro volatility, both economic and in financial markets, and that increases trading volumes for all their products, because it's not just the VIX volatility instrument, it's also all options on all stocks see increased volatility. So that drives up volumes for them. The analyst from Morgan Stanley has an overweight rating and a $150 price target. All right, so that's my look at CBOE, and check out my article where you can learn more about the history of CBOE. All right, thanks for joining me to talk about CBOE. Next up is Dave Bartosiak with his top stock pick of the week.
All right, Kevin, thank you for your top stock pick of the week. I've got one here. It is Zacks rank #1 strong buy, Invent Electric, ticker NVT. Let's take a look at Zacks.com and see why I like it so much. In addition to the wonderful Zacks rank here, this has a Zacks value style score of D, a growth score of C, and momentum of D to help it round out with a VGM composite score of C. The electronics and miscellaneous components industry is in the bottom 35% of our Zacks industry rank, but that shouldn't turn you off of this one. Let's take a look at some of these detailed numbers here. So the growth for the quarter, and we'll get into it a little bit later, current quarter 16% growth. Last quarter's earnings surprise came in 11.86% rather better than expectations, trading at 16.8 times earnings. Compare that to S&P 500 at 17.69. Let's look at the estimates and what's happened recently here. We can see current year revenue growth at 16.7%. That's expected to slow to 3.5% next year. Current year EPS, 17.86% EPS growth this year, and that's going to settle down a little bit to 7.14. But really, it's the recent earnings estimate revisions that we're happy about. Over the course of the last 60 days, you have two analysts upping the ante for the current quarter, current year, and next year, making an impact to the Zacks consensus estimate for the current year going from 222 to 231, and next year from 240, bounced a little down first to 236. Now it's up to 248. So some solid numbers there. Now let's take a look at my favorite chart, the price consensus and EPS surprise chart. Here you can see from early 2020 throughout the course of this year, some really good earnings growth. Estimates starting lower and then ticking higher throughout the course of the year. That's a good thing. That means they are under-promising and over-delivering on their reports. Also, as you see all these little green arrows, these are earnings beats or meets. And the last time this stock missed was back in the spring of 2020, a very long time ago. So there you have it for our top stock pick of the week for Kevin and I and everybody here at Zacks.com. Thanks for watching. Be sure to check out Zacks.com/promo for this week's deal on Value Investor. See you next week.